Hey guys, it's Reese Treno from the Vanguard team at Manor Realty. Guys, we feel like we're on a real estate roller coaster. The housing prices went up 13% last month. And now this month it looks like we're taking a breather. Now, does that mean that things are going to go up again or things going to go down? With me today, as always, for the monthly updates is Reed Renault from the Vanguard team at Manor Realty. Reed, thanks for joining us, buddy.
Yeah, absolutely.
It goes crazy. We've been talking for months. Oh, the housing prices get in now because we're going to start seeing these jumps. And then in January, we saw over 1,200 listings hit the market when we would have anticipated a lot closer to 450 to 400. And we knew that would grease the wheels, but so quickly, like where we see 13% price jumps in 1 month.
Yeah, it's really interesting. I think it's something that we've been preaching since, fall of last year. People got sour on the market. There was a lot of buyer speculation. People were kind of sitting on the fence. And I think team wide, we were educating our clients, if you're looking to buy right now, now would be the time to jump in because come, early spring of next year, we were really expecting things to boost back up again. And, we're starting to see that in the early part of this year, and especially with the March numbers that were just released.
Yeah, I mean, I think it's like good news where people can see now what's happened, and now it looks like in March we caught a breather. Things didn't go down, but things didn't go up, and we can get into those numbers right now, guys. So, guys, as always, as we dig into the numbers, you can always subscribe to our YouTube channel. You're probably watching this on YouTube, but there it is there, youtube.com, and we are the Windsor, Ontario real estate channel. Okay, guys. So let's get into the numbers with the market update. Number of new listings again. That's aggressive, man. 1,900 in
Yeah.
February, right? I mean, in March rather, right?
Yep, in March. It's a huge jump to go from just under 1,200 to over 1,900 new listings. And I'll let you go through the rest of the stats before we talk about a couple interesting key metrics here too.
Yeah, and that's a machine that feeds itself, guys, because we call it greasing the wheel. So basically, when you all of a sudden in January have 1,200 listings hit the market in a city and county of about 90,000 houses, all of a sudden, those baby boomers that are stuck in their two-story property, it's much too large for them. They're empty nesters now. They want to move, but there hasn't been a ranch for them to move into in the same neighborhood. All that kind of stuff now is popping onto the market. So a lot of these people are able to do the things that they've wanted to do, selling their house to downsize and once they downsize, now their house is available for somebody to upsize because they got 4 kids at home, right? And then that house, that starter house, somebody else could buy that. And what happens is that wheel gets greased and you see more and more sales, which frees up more and more houses for sale. And we're seeing that now, by March now, and now we're up to almost 2,000. Guys, that's 2% of the total houses in Windsor, Essex, all going up for sale in the same 30-day span. Think about that for a sec, right, Reed?
Yeah, absolutely. And the really interesting point when you contrast that to some of these other stats is if you go down and you look at months of inventory, although the number of new listings absolutely skyrocketed in March, we are lower in months of inventory by 3 full months, 7.25 compared to 10.25 the month previous. And as well, days on market are down. And that's a bit of a nominal decrease there in days on market, but what it's showing is a trend here. So although the spike in new listings was just obscene in that month. Months of inventory and days on market are both down. So if you need any other indicators that the market is heating up, if you are a buyer or if you're a seller who's been waiting for the buyers to come out and to put your house up, I mean, we're looking at it right now. We're just seeing what the numbers are doing in March, and it's expected to continue.
Yeah, and this is, you still hear it once in a while too. You get the occasional person saying they're waiting. Waiting for
Yeah,
what? Like,
yeah.
where is any indicator at this point that's saying, oh, the housing prices are going to drop? It would take somebody like somebody to press a red button and send some nukes up into the sky for the housing prices to drop at this point. Like, it's not happening, you know?
Yeah, a lot of people I found were using the excuse last year of, the buyers are sitting on the fence and I don't want to put my house up for sale, or I don't know where the interest rates are going to go, so I don't want to buy a house. all that has really leveled off. There's a lot of buyer confidence now. There's a lot of seller confidence, as you can see with the number of new listings. I think there's a lot of confidence that interest rates have at least stabilized and are likely to come down a couple times this year. So yes, if you are waiting to sell, there's really no need now. The buyers are out there. And if you're waiting to buy, I mean, now would be the time to jump in before it continues to increase as far as prices go.
Yeah, this is what we're talking about with the lull, guys, is that you could see the sales trending upwards, right? And then you can see the breather, right? The housing prices spiked by 13% and the sales dropped a little bit, right? And what that is to me is people adjusting to the reality. Like if you're, I'm looking for a house up to 400 grand, Reese, right? Well, that house that was 400 grand in February was 452,000 in March. So now all of a sudden you have to change your mindset. You're getting a smaller house for 400 grand significantly, right? And we had a lot of clients oh, what do you mean I can't get a house like that anymore? Well, Mr. Krankovich, we've been telling you for 4 months to hurry up, right? Now it's going to be a smaller house. There's nothing we can do about that. So that's what you're seeing right now, I think, is that sort of adjustment to the new reality. What do you think, Reed? Do you have a different hypothesis on that?
No, I think you're right. It just made me think of another point that I've been trying to tell some clients. Again, with the interest rates, a lot of people are saying, well, I'm going to wait until the interest rates actually do come down in 2024. With interest rates coming down in 2024, and even with them just stabilizing, as what we've seen in the last slide there, that means more competition. More competition means higher
Yeah.
prices. You are better off taking a higher interest rate, buying a house that you can afford that's maybe a little bigger, maybe a little nicer, maybe in the neighborhood you want to be in, refinancing that property a few years down the road. Maybe you take a 3 year or you take a 5 year and you drop it down to the current interest rates, assuming that they are lower in a few years, than you would be to wait until interest rates come, let's say, down to 4.5%, and then you're competing with everybody else. So I think people get too wrapped up in interest rates, a point here, a point there. And that's their deciding factor on jumping into the market, especially if you're a single person, first time home buyer. You're already in a very difficult price bracket. You're better off taking a little bit of a higher interest rate for 3, 5 years and then going back and refinancing at a lower price, lower interest rate down the road than paying $75,000 more for a property, or potentially leaving the neighborhood that you really wanted to be in because of competition.
Yeah, I mean, I tell people 2 to 3 years if they're gonna go
Yeah.
fixed. But the reality is that a variable rate has beaten the fixed rate. I don't know in the last couple of years with all the craziness, but up until 2022, since I was born, 1975, don't do the math, guys, I'm getting old. A variable rate has beaten a fixed rate every single year. So if you're really, really worried about paying too much, then you should be variable rate, right?
Yeah.
Because guys, when you talk about a fixed rate, what you're really saying in English, in plain layman's English, is Mr. Banker, I don't want to take any risk. I want you to take the risk. That's what you're saying when you're asking for a fixed rate. You're asking the bank to take on the risk of interest rates going up and down. And guess what? Banks don't take risks. That's why they make tens of billions of dollars every year. They'll say, sure, we'll give you that fixed rate. And they're very happy with that because they know they're going to make more money on your fixed rate than they would on a variable rate. And the statistical curve is basically 98.75%. You're going to beat the bank on a fixed rate 1.25% of the time. If I got that right, it's a statistical bell curve with two standard deviations. So it's less than 2% where you actually beat the house. And the banks know that. So that's what, again, coming back to what Reed's saying, and it's hard for people to understand this because right now they'll go, well, a variable rate's higher than a fixed rate right now. Well, yeah, because the banks know the interest rates are coming down. I used to play squash with a guy, Terry Betts. He was a senior vice president through National Bank because his investment company got bought up by them. And I learned a lot from Terry. And Terry was one of the very, very few people in Canada that predicted 1981 recession, 1987 Black Monday, the dot-com bust in 2001, and the global meltdown, 2008, 2009. So Terry's one of the very, very few people in North America that predicted all of them. And Terry laughed at me one time we're playing squash because I was relying on the news for economic data. And he goes, Reese, He goes, you understand that when you see it in the news, we've already known for 6 months what's going on. And I'll never forget that, guys. The banks and the higher finance institutions are 6 months ahead of us. So if they're offering X percent right now in a variable rate, there's a reason why, right? Versus a fixed. All right. So sorry, I got on a bit of a tangent there. We can keep moving, but that's Grandpa Reese telling his grandpa stories and his grandpa advice. I'm not a grandpa yet, guys. I'm a father. Yeah. Average prices in March. Again, this is the lull. 1.32%. Well, last month it was a 13% gain. This is what you call a. This is a breather. Hold on a sec, man. That was fast. Whew, hold on. Hold on. Okay, we're ready again. And it'll go again, right? Reed, I mean, yeah, am I preaching from the same pulpit here?
Yeah, absolutely. I think that month February was a bit of a shock to everybody, even in the business. So you're right. I think it's just a quick breather. I mean, a 1.32% decrease is basically just remaining the same as far as average prices go. But yeah, I think come April and May, we're going to see that spike again.
Yeah, the supply and demand, guys. There's not enough housing for rent. There's not enough housing for purchase, and we still remain the most affordable city of every major city in Canada. So there's room for property and rent increases, big time, right?
Yep.
Market activity. I mean, a lot of that market activity that you see is up is all those new listings hitting the market, right? So even though sales were slightly down, you can see the overall activity is robust, and that results in future sales, right? Direct correlation. You list all those properties while your days on market are dropping, while properties are selling for over 100% of the asking prices. You know, yeah, very busy on the listing side, fairly busy on the sales side in March. I mean, this is going to equate to much higher numbers because you're just loading up the market with listings that satiate demand, and that demand is just going to burn through them really quickly. I always love this bell curve because I call it the Windsor bell curve because it should be a lot more smooth, and it's not. Look at where everybody's buying and selling, right? Between 360,000 and 700,000. Look at the difference after you go from 700,000 plus. It's like a cliff, right? So we were just telling a developer the other day he wants to build $900,000 townhouses in an area that's not affluent. And it's like, Mr. Builder, are you sure you want to do this? Can you build some smaller, cheaper, semi-detached that are like under 700 grand? And this is the chart I have to show that developer so that they don't lose their shirt, right? I have to show them that drop. So for the investors out there, I wish we had more stuff in that 260 to 420 range because there's a lot of profits to be made in there. Right now, realistically, if you're an investor, you want to buy a duplex in that 360 to 420 range, ideally, if you can. Cheaper if you can, but then usually there's more renovations to be done. And people that love doing house and then renovate an additional dwelling unit into the basement, you're now pushing up into the mid threes to the mid fours, right? We're starting to run out of
Yeah.
viable options in that $300 to $360,000 range because a lot of those houses don't have basements; they have crawl spaces, right? The smaller places, right, Reed?
Yeah. Yeah, and it's important to note, I know we keep going back to the interest rates, but it's been such a hot topic in the last couple of years and speculation going into this year. If interest rates do end up coming down like it is being predicted, this curve is just going to continue to move across, right? So if you are somebody who's looking to buy in the $700,000-800,000 range and say, you know what, I'm just going to wait it out because I'm going to wait for the interest rate. Again, it goes back to the same thing. You may be better off taking a variable or taking a shorter term on your mortgage to get into that now, because as buyer power, purchasing power increases with the interest rates coming down, this curve's going to continue to slide. And we've already seen that. There was higher numbers in the 200,000, 300,000 range, and it started to shift over to the middle, and that'll
Yeah,
continue to shift. So whether you're a duplex buyer, a BRRRR strategy buyer, whatever, you're an ADU buyer or just a single family, this will shift over time. So, be cognizant of that if you are somebody who's just speculating or waiting right now.
it would be cool, wouldn't it, to have one of those little the old school
Yeah,
flip books.
just watch
Month
it
by
move
month, you
across.
would just see the wave go like this, wouldn't you?
Yeah,
Across
yeah,
across the thing. Yeah, you really would. It's a great point, Reed. And that's it. That's all, buddy. Thank you for joining us.
yeah, absolutely.
Any further questions or concerns, you can comment below, guys, or you can message us. Again, we have all kinds of email lists for pre-MLS, exclusive listings, in-pocket listings. And if you're an investor, you want to work with people like that have access to that sort of product, broken down, and then access to the renters that pay the most money and the tradespeople that'll keep you out of trouble, right? The number of times we have to fix a problem that a residential agent's made or a contractor we've never heard of has screwed up your property. Like, don't go through that. We're all investors ourselves. Just piggyback on us, make your money, and live happily ever after. That's how it works. We've been doing this for 20 years, guys. I'm Reece Trento on the Vanguard team. That's Reed Renault on the Vanguard team. Thanks for joining us.